All right, everybody. Welcome. Great to see you all. Jeremy, Brian, good to see you. Let's get right into it. You both started your companies a year apart, over a decade ago. Kind of similar missions, economic freedom, economic prosperity. You've walked a lot of similar paths. Today you have a lot of shared business and the same barber. And I thought it might be fun to take us on a little throwback.
Same outfit, too.
Yeah, we coordinated.
You got a great shoe dealer for the two of you. And take us on a throwback of where you started and how you came to intertwine and bring us to today.
Yeah.
Yeah, Jeremy, please start.
Yeah, so I guess we got started 12 years ago, so a little bit after Brian and Fred, and it was a very different time then, and I have a couple anecdotes, which is, I mean, first, the kind of the vision that we had, the mission that we had, we still feel like that's what we're doing today, and that's really rewarding to get to a point where that is the case. But when I talked to any investor, anyone else, like basically said, I want to build a new global monetary system based on crypto and digital currency, and I think it can change the way the international monetary structure works and improve the world in all these ways. Obviously, a lot of people didn't believe that, and in fact, I couldn't get an auditing firm. I couldn't get insurance. I couldn't get bank accounts. I was lucky that I had taken 2 companies public and was a successful entrepreneur, and so I was eventually able to get bank accounts. But it was amazing to me that literally you'd walk in a room with an insurance company and they were literally like, we're not even sure we're allowed to have this meeting. It's that crazy. And another little anecdote, which is kind of, again, sign of the times, which is before I actually formed the company and before investors who came along with me were willing to put any money in the company, I personally hired this group, Promontory Financial Group, which is sort of looks at laws and regulations and stuff. And basically the question is what I want to do even legal? Will me and my investors go to jail because
That's a good question.
Building something on top of this technology and so on. And so those were the questions and those were the issues from 12 years ago. It's obviously very, very different today. Yeah, I think the kind of mission vision of building a fully reserved dollar digital currency that could run as protocols on the internet, we're sort of finally getting there.
And now you can get bank accounts. Sweet.
Yeah, we're actually banked, it's true.
Yeah, that's nice.
We had a lot of crazy stories like that from the beginning as well. I remember calling, cold calling banks and saying hey, we'd love to get an account open. I remember this one woman on the phone, she's like, we do not work with crypto companies. Click. She just hung up on me right away. I remember going in to meet with, we actually worked with Promontory too, and they would shepherd us into these meetings with people in government. I met this one member of Congress, and I kind of sat there patiently, tried to explain the whole crypto thing, and at the end of the meeting, he was like, so this is some kind of video game you're building, right? And
Sounds like you're a good communicator.
Yeah, exactly. So there was a lot of weird moments early on, and very few people believed that this was possible. And so I think that's kind of the nature of entrepreneurship. You have to have a contrarian idea that's right and be willing to get 99 no's for every one yes, and then hopefully you are right. You're not. Sometimes people aren't, but you got to try it.
So speaking of entrepreneurship and being absolute gluttons for pain and punishment, suffering, tears, you both chose a much harder path than you could have chosen. You chose the harder path, longer path, doing things the right way, checking the boxes, being regulated. And I'd love to hear about why you chose that path and how you think about trade-offs between adoption and moving really fast and doing things the way you're supposed to, even if it maybe comes at the expense of that. I mean, Brian, do you want to go first?
Yeah, so this is always a tricky situation in the early days of a company where you've only raised a little bit of money, and so lawyers are expensive, going and getting licenses can take many, many years, And so you have to figure out a way to get started with something. But we always felt like, there were certain risks we were willing to take around, would there be adoption of this product, or could we get here with a good legal opinion in sort of a gray area? But there were certain risks that we just weren't willing to take around cybersecurity or sanctions compliance, and there was very clear, bright lines that you didn't want to cross. And I will say, over the years at Coinbase, it was sometimes frustrating because I felt like we were taking a compliant approach, and regulators don't always move very quick. And then we saw competitors come on the scene and kind of rocket up in volume and market share by breaking the rules. And many of those rocketed back down or blew up, or the CEOs went to jail. And so it is validating to see this long-term approach paying off. And the reason we took that approach, in our case, so we should hear from you too, Jeremy. I mean, it's number one. I mean, I grew up in the United States. I didn't want to end up going to jail or not be able to come back to this country. I wasn't willing to do something crazy like that. But more importantly, it was because we actually wanted to update the financial system, and to do that, we had to build trust and be a legitimate thing that more people in the economy, were willing to integrate with. And so it wasn't going to work by doing this get rich or die trying kind of fast and furious thing. We had to actually go integrate with the existing players and be a bridge between fiat and crypto. We couldn't just say, F the man and go do this kind of renegade thing.
Yeah, I mean, I think a lot of similar concepts. And when we were getting started, interestingly, you're referring to the glutton for pain concept, as an entrepreneur, the fact that to sort of realize the ideas that we had, my very strong belief back in early 2013 was that in order to accomplish it, we were actually going to need to change and shape global policy. And we would actually need to change and create new fundamental rules for how money works and the financial system works at a global level. That was ultimately how this would achieve scale. And so that was actually kind of exciting to me. I studied political science, economics, philosophy, not a computer science guy. But the doing really hard things with technology often kind of breaks the social norms or breaks the rule set that was created for cars on the road, or there's so many different things. And so to me, it was inevitable that this could happen. And so we knew we had to work with governments, we had to work with policymakers. And it came back to, again, that if we want this technology to be truly global scale and everyone in the world can depend on it and every person and every business can use it, it has to be legal. It has to become part of the legal framework around money. And there was just no other choice. And I think similarly, especially with what we hoped to do, which is to fuse what we think of as money, like dollars or euro, we want to fuse that to the internet in a very different way. That integration with the regulated financial system is very fundamental. And so there was just no choice other than to do this way. And now there have been other products that have not had banking or have done things in other ways, but we're building around trust and transparency. And when you're building a new money layer on the internet, that's so fundamental. And over the long run, right, I know, and I believed when we were early on, but I have the same conviction today, the world's leading companies and society at large are not going to build on and use something if it doesn't have, especially in the financial system, if it doesn't have that basis of trust. And so that's doing things the hard way over the long run, but it's just the right thing to do. So that's a little bit how we thought about it.
Yeah, updating the system globally and not going to jail have both worked out pretty well for you guys. And also on things working out really well, Jeremy, congrats on an incredible IPO.
Thank you.
And obviously this is the start of something much bigger and better to come for you and your team. So how do you think about operating now as a public company versus the path that you've taken? And then after you answer that, I'll ask Brian if you have any advice. It's around the time of the 4-year anniversary of Coinbase going public, and how have you felt things shifted as a public company versus how things were before? But Jeremy, go ahead.
Yeah, I mean, look, it actually relates to the last comment, which is that, I think Circle has built a very strong reputation, and both with USDC and as a firm, as being trusted, transparent, compliant, with good governance, high integrity, like holding ourselves to certain standards, and that is in part why we are successful, and that's just like fundamental, and we want to hold ourselves to those high standards. And so from my perspective, becoming a SEC regulated public issuer, held to governance standards of the New York Stock Exchange, it adds to the trust, transparency, compliance, good governance, et cetera. It just further strengthens things that are already fundamental to our business. And so it's, from my perspective, we've always held ourselves to high standards. We're holding ourselves to even higher standards. And I think it's an important moment because, whether it be, the Genius Act or like the incredible technology progress that's happening in crypto right now, it seems very clear that, we're going to enter a period where far more parts of mainstream society are going to use stablecoin money and are going to use blockchains for things. And so I think being a public company is really valuable as the world kind of thinks about who they're going to build with, who they're going to work with, and things like that. And so I think it is important in our development that way too.
Yeah.
Yeah, well, Jeremy's been a public company CEO before Circle too, so he doesn't need my advice. But one thing you made me think of was just when we did go public, I remember sending this communication to all the employees, and I kind of said, we are not our stock price. We're going to make it a social norm inside the company to not talk about short-term stock price changes, because we want to make sure that we're building the right things for our customers over the long term. We don't get overly focused on quarter-to-quarter changes or do something unnatural to try to make the difference in the next month versus 2, 3, 10 years from now. So having that cultural norm, I do think, has helped. And I think having our employees just go through the crypto cycles of big ups and downs, like they're more immune to stock price fluctuations, where in a private company, having them shift into that world and see a stock price change every day is kind of jarring for most people. But we grew up in crypto, so we're kind of used to it.
Yeah, after being in crypto for a while, I think you grow a pretty thick skin, and things like that don't jar you as much. You guys, diamond hands. Let me ask you about the partnership here. It's pretty rare for two public companies to be intertwined and partnering so closely. So talk about how that came to be. Jeremy, Brian credits you frequently for having the vision to bring shape to this. Maybe you want to start?
Yeah, sure. I mean, look, I think we've always been in pursuit of this idea of a protocol for dollars on the internet, and the idea of a fully reserved dollar digital currency that was safer than fractional reserve money, that could, kind of like other protocols on the internet, basically allow the storage and movement of value to be a commodity-free service on the internet, right? As we have with other forms of information, data, communications, et cetera. So that sort of animated our vision, and we saw it was technically possible, and sort of began work on that back in 2017 and 2018. But I think when we were getting started, we knew that this had to be something that had major partners that were part of it, and there was just no better company in the world in 2018, and obviously still an incredible company that we're able to work with. But I think we wanted to make sure that people around the world could easily access this, and I think there are very few companies who had an aligned set of vision, values, like technical acumen, compliance, and like great execution in the market. There are just very few companies that could do something like work with us to make this a big thing. And Brian stepped up and his team stepped up, and we built a really strong collaboration to drive USDC from its earliest days. And we've evolved that, and it's become a huge thing for both companies, obviously.
Yeah, I mean, when Coinbase and Circle first started, we were actually competing more directly. And I think at some point, to Jeremy's credit, they had this vision of a digital dollar and started to think more about that. And they came to us, and we said, you know what? we'd love to work with you on that. We put our heads together like a tiger, I think it was on our side, it was probably like a small team, like 3 to 5 people just got kind of locked in a war room for a couple weeks, worked with the Circle team on the smart contracts and everything, and we got it out live. And today, Coinbase is really a distribution partner for USDC, and I think the combination of those has been a huge success. So yeah, having a trusted, compliant digital dollar is a huge deal. We're seeing that as legislation develops around the world now with MiCA in Europe and hopefully the Genius Stablecoin Act in the United States, that I think the world, the biggest institutions, customers, some of the partners we're going to talk about later today, kind of every company that we're seeing is asking themselves, what is our stablecoin strategy? And they're coming and talking to Circle and Coinbase and folks that are using USDC as the most trusted option.
When you're sitting here today, and it looks like, in hindsight, for people sitting here, maybe just like a trail of successes behind you, some of the things that in the moment felt painful or you were unsure about kind of fade away now. But I mean, Brian, you're famously advocating for taking risks and adjusting and getting data really quickly. That means you've probably been wrong about a bunch of things.
Yeah.
Maybe not as wrong as often as the New York Times thinks that you are, but there have probably been things in the past that now looking back, you might reflect on that differently. And same for you, Jeremy. What are things that you expected at some time in the past that actually ended up working out differently?
Yeah. You want me to start?
Yeah, like with USDC.
We have things like that at Coinbase all the time. We have 10% of our resources go toward venture bets, and any employee in the company can come in and pitch an idea twice a year. And it's kind of like pitching an internal group of venture capitalists. There's the people who run the different product groups and myself, and you only need to get one of them to say yes and fund it out of their budget, and you're greenlit. Famously, there actually are examples like USDC that I'm ashamed to admit, Jeremy, where I initially was skeptical on it. And I think if some other people, because I was like, well, we got to focus on decentralized crypto, and this is a dollar thing. And to their credit, people on our team inside Coinbase were like, nope, we're going to fund this one. I was like, okay, let's try it. We have a portfolio of bets. And it's just been a out of the park, like home run success. So it shows you how much I know. And I think it's partly, the value here is actually creating that structure internally where anybody can champion an idea and fund a small bet. And if it works, double down on it. And probably half the ones that we fund don't work out, but that's what's created this culture of repeatable innovation, and it's allowed us to save the company from maybe the bad instincts of the CEO once in a while.
Half is a pretty good batting average for a moonshot factory.
Yeah. That would be if you just get 1 out of 10 can return the fund multiple times over, right? But you have to have, the culture has to be willing to tolerate 50% of people saying, we tried this and it didn't work. In many organizations, it gets too risk averse. They're afraid if their name is attached to one of those projects that fails, that they'll get fired or there'll be a black mark. And we don't celebrate failure. That's going too far. But we do try a lot of bets. And if it doesn't work, go to the third one, the fourth idea, the fifth idea.
Yeah, most companies are one person has to say no for the idea to be killed.
Yeah.
Jeremy.
Yeah, I mean, just we make a lot of bets. I think very similar philosophy, and we've had lots of things that have failed. We've shut down products over 12 years. Like, you work on a lot of different things, and we've had things that have been super successful. And we're making a lot of bets right now for future ideas as well. I think just in terms of the question too, like something, back in 2018, actually, I think we had very high conviction that what we now talk about as tokenization, but that sort of the role of digital tokens would explode, and they would become far more prevalent in terms of how companies worked, how startups were formed, how software could be designed and incentivized, and the Web3 kind of vision, like back in 2018, we had a lot of conviction about that, and we actually thought that that actually the statements of the SEC, which were come in and work with us, and we want to just figure out how to make all this work, and et cetera. We at first thought that was genuine. And so we were wrong about a bunch of things there in terms of like the timeline, the readiness, the regulatory realities, and other things. But it's interesting now. It's 7 years later. Is that right? God, 7 years later, and like all this stuff is coming around, right? And so you can actually now, and it's an environment where you actually can execute a lot of these ideas technologically, legally, and otherwise. And so timeframes are oftentimes, something you might be right about the idea, wrong about the ultimate expression of it and timeline on it. Yeah.
So where do we go from here? People like to say that overnight successes take 10 years, and that's certainly the case with you guys, although overnight success to you is probably also you don't sleep at night because it feels like it's so over half the time. But you've had ups and downs, and from here, what needs to happen for stablecoins to have mainstream adoption? I never thought I'd say this, but it's a bipartisan issue now in DC in the sense that both parties like it. That feels surreal. So in some sense, you've made it, but the it is actually a lot better, a lot bigger. So where do we go from here?
I'll take a part of that. I mean, we're in the super early stages of this. Like, the reality is that the TAM on legal electronic money is nearly $100 trillion. The TAM on cash and non-interest-bearing demand deposits, sort of cash money, in the world is $60 trillion. And then all of the utilities that move that around and use that, whether it's in retail payments, business payments, capital markets, all these things, amounts to trillions of dollars of revenue. And so, we're super early in this. And I think, like other major internet, I sort of describe it as like the internet is colliding with the financial system, and the internet's collided with a lot of other industries. It's now fully colliding with the financial system, which is super exciting. But it actually, it takes time, right? You have to remind people that, retail commerce is still overwhelmingly in person, and that, actually viewing hours of video is still dominated by cable, satellite, and terrestrial television, not streaming. And so these things take time. But if in 10 years, 15 years, the internet financial system is 5% of the activity or 10% of the activity, that would be extraordinary. It would be totally extraordinary and would, I think, be amazing for both of our companies. But I think would be extraordinary. And so we're just at that point, if you know Jeffrey Moore's Crossing the Chasm book metaphor, right? We've just crossed the chasm, and we're just entering the slope of enlightenment. And that's a really exciting place to be. But pretty much everything's still ahead of us.
Yeah. So today, less than 1% of global GDP is running on crypto rails. We estimate it's about half of 1%. And so to Jeremy's point, this is very early days. I think that we can see a future where the majority of all payments in the economy are running on stablecoin rails because it's faster, it's cheaper, it's more global. Payments flow like water to the path of least resistance, and these are just fundamentally better rails. And so I think the future and success looks like 1 billion people accessing a more efficient financial system every day using our products.
It sounds a little crazy. It seems possible. So let me end on this question. You both have a lot of experience in looking super crazy. And you've said things in the past that sound super tinfoil hat or whatever, and then somehow they've come to be through determination and talent. And what is something that you believe today that is probably going to make you sound a little bit loony to this crowd, but that you feel you might get vindicated by history in the future? Jeremy.
Yeah, I mean, look, there are a lot of things like that I think about. So I'll just try and pick one.
Let's relate it to stablecoin business,
yeah.
not your UFO theories.
Yeah, so I mean, look,
I
think stablecoin money is going to, as the base layer of money on the internet, is just a superior form of money for a lot of different reasons. And I think that when we think about economic expansion and economic growth, raising global economic prosperity, things like that, I believe that the ability to use that new form of money in credit is actually a huge opportunity. But I think very specifically, over the long run, that credit intermediation will be principally done in stablecoin money, and I think it will be principally done by machines on the internet, and it'll be done in a structure that probably looks more like AdWords than like a bank lending desk. And I think that will lead to a radically more scaled, more efficient, more accessible credit delivery system that will stimulate economic growth in ways that the current financial system can't. And I think that's going to happen. And I think that's going to be a pretty significant change to the way value exchange, beyond just moving money, but value exchange in terms of that time value of money transformation takes place.
Awesome.
Yeah, for me, I mean, money has multiple purposes, right? It's a medium of exchange, which stablecoins is solving beautifully. It's also intended to be a store of value. And right now, democracies around the world are really struggling to get their deficit spending under control. And I think that Bitcoin actually, I guess my crazy little bit out there idea is that I think Bitcoin is going to provide an important check and balance on deficit spending. And if it gets out of control too much, people will flee to it in times of uncertainty. And it could actually end up that Bitcoin is the new reserve currency of the world.
Bitcoin is the new reserve currency. You heard it here first. Thank you, guys. Brian, Jeremy, thank you very much.
Thank you. All right, good stuff.
Thank you.